Hello and welcome. Today I'm joined by John Bennet and Andrew McCarthy, who are the co-fund managers on the Henderson European Focus Trust. John, Andrew, thank you very much for joining me today. Now John, at the start of the year you were very cautious around the hype around global synchronous growth, and you were warning that volatility is going to come back in 2018. Volatility has returned and we're now talking about a bear market as we head into 2019. So what I'd like to know, without asking you to look into a crystal ball, is what is your feeling as we head into 2019?
Yeah, I mean, I always start, it's the most obvious disclaimer, never make forecasts. With that disclaimer, here's my thinking. You're absolutely right. I went into 2018, one of the reasons I sold the banks early in 2018, I went in with a less sanguine view of the world than what seemed to be, than that which was held by the consensus. So synchronized global growth, etc. I challenged that personally, and I think it was right to challenge that. Europe's been in a bear market for some time, actually. The depreciation of sterling has maybe been a bit of an optical illusion because it's made it not look quite so bad in sterling terms. And sterling investors have done well out of continental Europe in recent years. The currency plays its part. I think in euro terms, in dollar terms, Europe, you'll see that it actually, certainly at the large cap end, it's been a struggle for some time. I think what's afoot is a change. I think looking into 2019, the bear market, the bear that has only shown up in something called the S&P and something called the NASDAQ, has only just shown up. So my view looking at 2019 is that it's over for technology. It's over for the S&P, it's over for the NASDAQ. I actually see a lot of downside there. This doesn't mean to say Europe goes up. Europe at an index level, I think will struggle to go up if the US is going to fall heavily. It might not fall heavily, but it may well do. That will challenge the direction of Europe. What is back is stock dispersion. So I went into 2018 perhaps a bit gloomy. I'm less gloomy in this bear market. In a coming recession, which I think is coming to many parts of the world, that's when you get bargains. And that's why I'm beginning to get onto the front foot.
Yeah, I'd just say that if you look, we look at various leading indicators to help form our view. We look at the work of Simon Ward to help form our view. And we can just see, we've started to see, the slowdown which is being realized in the market now. And we're just being very prudent, even with those industrial names where we have high quality franchises. We're just looking sensibly at the profit forecasts and whether they make sense, and where necessary we dial those back in. But once we go through a period of, if there is a period of correction, we'll get the chance to revisit some of those franchises that we know and love and generate great returns for shareholders at some point in the future.
Now the saying goes, what goes up must come down. So what I want to know is, does that translate into equity markets? And what are your thoughts on that long-running US bull market? Well,
it resonates. What you just say, what goes up must come down. Of course, mean reversionists like myself, some would say dinosaurs, maybe fossils. I think mean reversionists like myself have been perhaps written off a wee bit, pilloried by some, which you get in momentum-driven hot markets where the benefit of the doubt is given to any disruptor and all that sort of stuff. I think there's some interesting mean reversion just starting at that end of the market. Of course, where Europe benefits is it didn't have quite such puff going on. So dear old poor cousin Europe, I think is going to be a positive mean reverter.
Now we've talked a lot about the US and the tech boom of recent years. Europe's large cap sector is not often talked up and has played in the shadows. So why would anyone put their money into Europe's large cap sector now?
Well, you mentioned it yourself, it's played second fiddle, probably worse than second fiddle to many of the other markets we know and love. But I would just say that, there is value within these companies. They're not just European companies, these European large cap companies, they're global. There is value there. And it's going to be quite interesting. It's very clear that the European market is unloved, but that means there are opportunities. And with respect to how we think about the fund flows we've seen, we think we could potentially see a period of European outperformance. That may not put forward a particularly cheerful message about the performance of other markets, but we just think Europe has underperformed for so long, and we're looking at the various valuation characteristics as well. We could see a potentially interesting period of performance for European equities relative to those around the world.
John, Andrew, thank you very much for joining me today.